It's been just 3 days since the failure of First Republic Bank, a California lender that caters to wealthy clients. This follows another big bank collapse, that of Silicon Valley Bank. And there are still many disruptions to the banking system that the Federal Reserve has to deal with, so they have some tough questions to answer after raising interest rates for a 10th straight time on May the 3rd, just a couple of days ago. But it may be the end of this tightening cycle, so what could this mean for crypto investors? Good or bad? Let's start the show and talk about this. Hi guys, you're watching Crypto Corner, a video podcast where we talk everything crypto related with myself, OJ. I am your host. I've been in the crypto space since 2016, first as an investor, then as an analyst and trader as well. And I started this channel 6 years ago to discuss the latest developments in blockchain tech and to give you my view and analysis of the crypto markets. And today I want to discuss with you the latest rate hike by the Fed and how this can affect crypto. 3 days ago, the US Federal Reserve yet again raised interest rates to curb inflation, now reaching the highest levels in 16 years after the central bank raised its benchmark rate 0.25% to 5.1%, slightly above 5%, but this is significant because it represents the highest figure we've seen since the days prior to the 2008 banking crisis. The crypto market had a mixed reaction to the hike, with initial a small drop and then a couple of percentage points gained. So that was straight after the announcement. But as you can see, in the last 24 hours, we're about 3% up in Bitcoin, 2% up in Ethereum, and the rest of the top major markets are following suit. So this is kind of small moves, 2-3%. It's nothing really major. Typically, these rate hikes have a knock-on effect on risky assets such as stocks and cryptocurrencies. Bitcoin has been touted as a hedge against rising inflation. However, it responds to reduced liquidity in the same way as other risky assets. The interest rate hike has also caused some major stock indices to sink, but the broader market largely looks unchanged after a short pullback. However, there is a concern that 10 rate hikes in 1 year may cause the economy to slow down or even trigger a recession. Regional US banks may be exposed to systematic risks as a result of the increase, and according to a recent report, the uninsured depositors at many regional banks are still withdrawing money, straining the system. This could be a possible reason that the crypto markets didn't take the news too badly, and in fact we even see a minor pull on the upside. The US Federal Reserve has raised the interest rates in an attempt to curb inflation, which has slowed down in the past few months. Consumer inflation in the US decreased in March, but remained at 5%, significantly less than the 6% seen in February. Some analysts had predicted that the Fed could actually stop tightening monetary policy due to the banking crisis, and this latest increase by just 25 basis points is noticeably less than the 50 or 75 basis points increase that we've seen several times over the course of last year, indicating that perhaps the end of the tightening is coming. The Fed's efforts to curb inflation by slowing the economy with the most aggressive series of rate hikes since the 80s are beginning to show results now. Construction and manufacturing, which are particularly sensitive to borrowing costs, have downshifted. And after a strong January, consumer spending slowed sharply in February and March as well. Meanwhile, the Hong Kong Monetary Authority also increased interest rates on Thursday, and many countries in the European region are also increasing interest rates, so the US is not alone in the struggle economically speaking. The crypto markets are yet to make a more pronounced move. So far, I'm seeing a rare show of indecisiveness. The price is up from a few days ago, but the weekly time frame on most coins is still in overbought territory, and I expect that at least for another week or so, we will be seeing consolidation and possible more downside price action, especially after the pumps over the last couple of days. Now, if we look at the Bitcoin chart, what we can see here is that we are holding this support zone of mid 27,000 quite well. It's still possible that we go down. It shows that another challenge of this support is to be expected, but if we break this support, only then a drop to the lower support at mid 24,000s is a likely scenario, but until then we're still making higher highs and higher lows, and this is an indication of an uptrend. Being able to defend the current support level that we are right now in, that would mean that we are gearing up for another rally on the upside. So this is why a consolidation for the next week or so will be a good thing, not necessarily bad. Any small pullbacks are okay as well, as long as we don't hit the support hard. And we are very close to that support zone. We are not really that far. Even though it's 29,000, we are now going again for the resistance. This is the channel that we are working within. We have the resistance of 30k, and then we have the support of lower 28 and upper 27,000s. And looking at the overall crypto market capitalization chart, now we seem to be in a resistance zone here. A rejection from here would mean a drop, most likely in Bitcoin first and then followed by all of the outs, and that drop could actually take us to that trend line here. So it is a likely scenario. I'm keeping an eye on this chart. A pullback all the way to that support line here is something that we can expect, even if it's just a short-term dip. We printed a peak recently and we got rejected from there a couple of weeks ago. Since then, we're in decline. I see a head and shoulders also forming here. Not very pronounced, but still, it is a bearish looking pattern, so we have to be on the lookout for this one. And lastly, looking at the shorter term, the 12-hour chart of Bitcoin, so not exactly immediate term, but still shorter term here than the weekly. This pennant pattern here is about to break any moment right now. If we manage to break out on the upside, which is what I'm expecting, it's good news. This is a bullish pennant pattern, so the likelihood of an upwards breakout is very high. If you don't know about these patterns, by the way, I have a free PDF, free ebook, the most used charting patterns. It's in the description below, so grab the link from there, download it. This is why I remain bullish for the immediate term, the next few days. But I'm also doing short-term swing trading right now, so this is not really an investment strategy for me. I'm talking about short-term swing trading here. I have set up trailing stop orders to sell if the market drops by 3 or 4%. These are low price swings, but it works for this kind of low volatility, because a 4% drop could actually be the start of a bigger correction, so it makes sense. In my previous video, actually, I explained about trailing stop loss orders, so make sure that you check this out if you're not familiar with this. Binance recently started having this feature, which is great. I'm very happy that they have it, because not many exchanges actually have trailing stop loss orders. During this kind of undecisiveness in the market, going up, then dropping, wiping out all of these gains from the previous few days, even the previous couple of weeks, I would say, wiping all of these gains and now starting to make them again, starting to go on the upside again, it is very likely that we are going for that resistance yet again at 30,000. And as I said, this is low volatility, 27, 30k is not really a big margin, but anyways, it is good for short-term swing trading. This is what I'm doing right now. Again, I'm not really talking long-term investing strategies or anything like that. So what I'm doing right now, buying Bitcoin when we go to these support levels and then selling it as we hit resistance. This is just short-term trading for me. Now, I didn't sell, even though we hit resistance already. This is the resistance line. By the look of it, I'm actually seeing that we are about to break up on the upside. So I'm staying in this trade. I have a trailing stop loss order. First, we're going to ride it all the way until it gets, it prints a high at some sort of a top here, local top. And then as it starts retracing, as it starts losing, we're going to be selling on the way down, because there's no point selling on the way up here right now. We don't really know, as we break from here, we don't really know how far high we will go. We can assume that we can go at least as much as the base of this, but I personally feel that we're going to get stopped before that. So I'm expecting that again at around 31,000 we're going to hit another rejection, and we're going to see a lot of selling pressure. So this is what I'm expecting for Bitcoin in the shorter term over the next few days to a week.
One of our sponsors is Token Metrics. I chose them to be one of our partners specifically because I use this website a lot in my marketing analysis and research. If you want to know where is the right time to enter a position on any coin or token, and more importantly, when to exit, because this is really the difficult part. There are loads of metrics here to help you with that. This is one of their new tools that helps me analyze the market better and spot the right entry or exit points. As you can see, it gives you a green signal when the market turns bullish, meaning we are in an uptrend, and the red signals indicate when the market has turned bearish. Thus, exiting positions and preventing losses becomes really easy with this tool. There are so many tools that you can use. Here's another one, the out season Bitcoin season indicator, that gives me a very good idea if it's time to diversify into outs or should my focus be on Bitcoin instead. There is no need to be a back holder during a bear market. I think by now that much is clear. And with this tool, it's a no-brainer. They provide in-depth data and stats on all cryptocurrencies and a lot of new upcoming projects, launches and token sales too. This is where I find unknown gems before they hit the mainstream, and I particularly like their emails with detailed breakdown on technicals and fundamentals on the projects that they research, and their expertise in this field is second to none. You can also customize your portfolio and track your P&L day to day, and you can create separate portfolios for different exchanges that you use to monitor your progress in the most efficient way. There are so many categories to choose from when analyzing the markets, way more than I've seen on any data aggregator website, so you can really advance your analysis and improve your investment strategies. I've been a premium member of Token Metrics for the past 2 years, and I'm using it on a daily basis. They send us emails, host webinars and podcasts with technical analysis, and they go deeper into their research of new projects or current market conditions. I find this really helpful in my own market analysis, as they give me a hint to things that I might have missed or overlooked otherwise. They offer a trial period and you get a 10% discount and a free ebook with my link, so go check it out, it's in the description below.
Alright, well, this wraps up today's episode of Crypto Corner, everyone. Thanks for staying until the end. If you like this video, show your support, leave a like and a comment below. Also, if you have any questions or any suggestions for topics that you want me to cover, drop them in the comments because I do check this. Make sure that you check out the links that I dropped in the description below, because these are links to all of the crypto services that I'm personally using and that I'm recommending to you. And also, while you're here, make sure that you pick another one of my videos, and I'll see you there.